Hi, Steve Nison here, and we're going to do a chart challenge. I'll be asking you essentially what would you do here. I'll show you a chart and ask you what kind of trade you would do or wouldn't do. And this is going to be a short video, but it's a great way to reinforce and solidify your education that you get here at candlecharts.com. And this is part of our ongoing free education that we do to the or for the candlecharts.com family. So let me show you this. All right. And it really doesn't matter what market you trade. Whatever I talk about here is valid for all markets and all time frames. So the question is, over here, what would you do? And actually, it's a couple of questions. You know, what candlestick signal is this in the semicircle over here? And what would you do here, assuming you have no position on currently? And what you could do is put the player control on pause and then hear my answer. So here we have a bearish engulfing pattern. That's when a black real body wraps around a white real body, or depending on your charting platform, it might be a red real body wrapping around a green real body. So normally this is a bearish reversal signal. This is especially a really nice bearish engulfing pattern because the black real body is multiple times the size of the white real body. So normally we would it would warrant exiting long positions or maybe even thinking about shorting. However, one of the things we bring out throughout our education is the importance of candles in context. And what does that mean? That means not only looking at the individual candlestick signal, but also where it appears within the context of the market. So here, indeed, we have a bearish engulfing pattern, but notice what we have over here. Over here, the low here, and actually, let me just move this arrow. Okay, so I removed the arrow to make it easier to see. We have a rising window, one of my favorite candlestick signals. And we should know that a rising window, which is the same as a gap in Western Technicals, is a support area. So if you're exiting or using this as a bearish trade or exiting, you're exiting or doing a bear trade right at support. So one thing we could do is either wait for a break under the rising window, or for those who are short-term traders, you could wait for a rally to the high of the bearish engulfing pattern, looking for a retracement just to the bottom of the bearish engulfing pattern. So let's look at what happened. So here, notice how well this rising window held its support, and it broke here. This is where we could think about exiting a long position because the support area is broken. And as I mentioned before, another way to do this trade is, it may not happen, but wait until the market gets near the high. We could use many candlestick signals as support or resistance. So we could use the high of the bearish engulfing pattern as resistance. It gets there, you can think about selling it. This is a very short-term trade, just looking for a retracement to the support area down here at the rising window. This is obviously a low-price stock, so a trade like that wouldn't net much money. But if this was a higher price stock, that idea of selling right near resistance and covering the short position at support would work out okay. I personally would rather wait for a break of support, but that's just my style. So hope you found this useful, and we'll continue to work with you with free educational resources, so keep an eye on your emails.